Now let's come to expense. Now expense recording is done based on the nature of classification, right? So expense could be manufacturing expense, right? Sales, distribution, administration, these are all expenses. You could also expense by nature, depreciation, material, rent, taxes, electricity, and so on, right? Now, when you record it, you tell me in the income statement, will you record it based on function or based on nature in the income statement? Function. It's always by function because I want to show costs, then administrative, then selling, then distribution. I'll only show it by function. Within the function, I have to classify all the nature into the right function. So from an accounting point of view, in any exam, US GAAP or Indian IFRS, you'll always show it by function. Clear? Therefore, learn the functions. There are only 4 functions. Manufacturing cost, then then actually in order. First manufacturing, then you have admin, office running costs, then you have sales, and then you have distribution. Okay, so we normally show it in that order in the financial statements. Okay, but yeah. The income statement, you already know the components. We have revenue on one side, on the top, and then we have expenses. This is how we do it. I know you have learned in India, trading account, all that is not relevant. That is wrong way of doing it. Now we do it in international like this. On the revenue side, I'm supposed to show every item of revenue, not just goods and services. Every item. I need to show goods. I need to show services. I need to show commission. I need to show gain on sale of investments. I need to show other income also. What are other incomes? What other income? Maybe interest income, maybe investment income, maybe income from sale of goods or fixed assets, anything else. It is not necessary, it's only from sale of goods. When we do in India, we should always say revenue from sale of goods. That's wrong. Now sale of goods, service, gain, fixed assets, investments, everything. Interest income, everything comes in revenue. On the cost side, by function, you will show all the purchase of goods, right? Goods, COGS, basically all the COGS will come first. Then you will have manufacturing, admin, S&D, depreciation. These lines are important. And only these lines are important. Do you see rent here? No, it's sitting here. Do you see depreciation? No, it's sitting somewhere here. Right? So all these lines are important. You cannot remove a line. You can't say, okay, I show depreciation admin. No, depreciation deserves a separate line. Finance expense deserves a separate line. These are bare minimum. If you feel you want to add more lines because they're important, you can add or show it as other expenses. Are we clear? So learn the breakup. Revenue comprises of goods and service and every other income. Expenses contains of purchases, admin, manufacturing, selling, distribution, function-wise, and additionally, depreciation and finance. These are additional. Why they additional? Okay, you tell me, why do I need to show? Guys, very important question. Let's see who answers this carefully. Why do I need to show depreciation separate? Answer. No. Why is depreciation be shown separately? Anyone? Depreciation. I can just show it as admin expenses, no, or office or other expenses. Anyone online? Depreciation?
Depreciation gets some
Non-cash expense.
Non-cash item.
Very good answer. See, depreciation, very good answer. There's 2 answers to it. One is, it is a non-cash. All of these are cash. This is the only line which is non-cash. And in fact, even interest sometimes is non-cash. Because interest is also based on the payment. Now, the second answer is, US is the only country who also discloses something called EBITDA. EBITDA. In India, we don't disclose, IFRS will not disclose too much. EBITDA is profits before DA. depreciation, amortization. If I don't know depreciation, I will not know EBITDA. Clear? Now, EBITDA is a different line which is required to be analyzed. Non-cash, cash profit. This is cash profit. So the user wants to know what is a non-cash angle separated, because that will give a better idea of the future. Are we clear? So please, importance to depreciation because non-cash, and it helps you to find EBITDA. Because I will give only EBIT, but how to find EBITDA? Add back depreciation. EBITDA, right? EBIT plus DA is EBITDA. So very important to look out for depreciation. Good answer, guys, online. And EBITDA is a factor of depreciation. So do remember, this is actually depreciation and amortization, which is goodwill, intangibles, which is also non-cash. Clear, guys? Make a note of that quickly. So make a quick note. So if you look at this slide, if you have the notes, just understand that within expenses, depreciation is the only non-cash line, right? Debt and amortization, just write that. And right, it leads to EBITDA. Clear? Any questions so far while we move on? Okay, now you've learned revenue, you learn expenses. Now, how do we record expenses? Revenue you learn. Now, please understand, you need to understand the recognition principle. So what is recognition principles of revenue? It is 5-step process: contract, price, allocation, perform obligation, all that. What is the principle for recording expenses now? So revenue is done, expenses. So this is the 5-step process, right? To record, you need to follow the 5-step mandatory. What is our step here? Answer? So to record this, you need to simply follow the matching principle. That's it. Matching principle. There's no 5 steps, 2 steps. Simply match. Matching principle means you have to match purchase to sales. Right or wrong? If you've sold goods, you better match your purchases. That's it. That's your closing stock. If you incurred some expenses, check the matching. Depreciation, check the assets. Check. This is all matching. These are very simply the matching principle. Clear? Revenue is based on 5 conditions. The expenses is based on matching principle. What are the matching principles? Quickly. Okay. Basically, matching cost of revenue. Example, depreciation also matching, right? If you use the asset for producing goods, I will depreciate based on how much I produced. The more goods I produce, the more I sold, the more I'll depreciate. Why? I am matching revenue with cost. Got the logic, but we teach you something different. We say do it based on useful life, based on number of units produced. Why? That is matching revenue with cost. Are we clear? Same here, expenses also are to be done based on the rules. It is not based on payment. Payment is not my criteria. I hope you know that by now, right? So if expenses, now remember, under expenses there are 2 types, direct and indirect or period cost. If it's a direct expenses, means I can directly relate it to the final product. I will follow matching principle, right? Like direct labor, 1-to-1, direct expenses, manufacturing cost. I can match it, right? Basic cost, direct cost. If it's indirect cost, like let's say rent, you can't match the rent of production, right? Printing, stationery, salary of CEO or managers, you can't match them. So when expense cannot be matched to the final product, what do? You will incur it in the period you will charge it off to the entire period, irrespective of how much you have produced. Right? Rent, salaries, depreciation, fixed cost, all of that go to full period. Are we clear? So learn there are two types of cost. Direct cost, by the way, direct cost is also called as product cost. So in the costing world, I have product cost and I have period cost. Product costs pertain to the product and are matched to the product. Period costs pertain to the period. You cannot match it to the product. You got the example, you got the reason why, right? Is that clear, guys? Okay. So just make a note of this. Make a note of the fact that it's a product cost and a period cost. Product pertains to product, so you match it like COGS. And period, you can't match it, so you put it in the period.